Welcome to BIT's GST Written Filing online tutorial. This example takes us to Dragon Mart, a large wholesaler in Thimphu. Dragon Mart supplies and deals with both exempt and taxable goods. Meet Dawa, Dragon Mart's accountant. January 2026 is his first month of GST filing. Like many other wholesalers, he faced a common question: how to file a GST return when some goods attract GST and others don't. Dawa applied the golden rule of GST return. Only goods and services that have GST are entered in the system. Exempt items do not appear in GST return, not in purchases, expenses, and in sales. But you must still maintain full and complete records for GST verification and your future income tax calculation. Think of the GST return like a sieve. Only GST transactions pass through. Everything else stays in your books outside the GST returns. Why? Because there's no GST to track on exempt items, no input tax paid, no output tax collected. Dawa logs into BITS Online and clicks on Returns. January 2026, File Return. Dawa has separated his transactions in his accounting software. Exempt items in one category, taxable in another. This makes GST filing so much easier. Let's start with what Dawa does not enter. Why not? These items didn't attract GST at point of entry. No GST paid, so nothing to claim as input tax credit. Remember, these transactions still exist in Dragon Mart's financial records, just not in the GST return. What to include? Dawa enters Nultrum 450,000 in the total taxable import value field. Watch BITS calculate. Input tax Nultrum 450,000 times GST 5% is Nultrum 22,500. This is the GST Dragon Mart paid at the point of entry when importing these items. They are entitled to claim this as input tax credit. Dragon Mart also purchased some packaging materials, cleaning supplies, and office equipment locally, all taxable items. Additionally, they paid electricity and Wi-Fi bills, as well as an invoicing subscription fee, which are all taxable expenses. Dawa enters Nultrum 120,000 in domestic taxable purchases and expenses. BITS calculates input tax equals to Nultrum 120,000 times GST 5% equals to Nultrum 6,000. Note: domestic purchases of exempt items like sanitary napkins, if any, do not appear here. Only taxable purchases. Dragon Mart operates on a wholesale model: buy in bulk, add profit margin, and sell to retailers. Let's see how this works with their taxable inventory. Dragon Mart sold their imported taxable items with a 10% profit margin. Imported taxable items. Original import cost Nultrum 450,000. Profit margin, in this case 10%, Nultrum 45,000. Selling price exclusive of GST, Nultrum 495,000. Now, add the domestic purchases they are also selling. Domestic purchases resold. Original cost, Nultrum 100,000. Profit margin, in this case 10%, Nultrum 10,000. Selling price exclusive of GST, Nultrum 110,000. Total taxable sales equals to Nultrum 495,000 plus Nultrum 110,000 equals to Nultrum 605,000. Dawa enters Nultrum 605,000 in total taxable sales. BITS calculates the output tax of Niltrum 605,000 times GST 5% equals to Niltrum 30,250. This is the amount Dragon Mart should have charged or collected from their retail customers. No exports this month? Dawa enters 0 in the 0 rated sales field. Important! Even if you have no exports, you must enter 0. Don't leave it blank. BITS needs to know you checked. What about exempt sales? What about the rice, salt, and sunflower oil Dragon Mart sold? Here's the beautiful part. Dragon Mart doesn't charge GST on this item because they are exempted. Retailers buy this at cost, at 10% profit margin, no GST added to the invoice, no entry in GST written. Dragon Mart's GST return stays simple and accurate. Smart taxpayers verify before submitting. Dawa double-checks his input tax credit claims against GST Act restrictions. Why does this matter? Claiming ineligible credits may trigger extra compliance costs for your company. Protect your company. Verify your calculation first. All verified? Let's review Dragon Mart's January GST position. Total input tax, Niltrum 20,500. Output tax, charged or collected. Taxable sales, GST 5%, Niltrum 30,250. Zero rated sales, Niltrum 0. Final calculation, output tax Niltrum 30,250 minus input tax Niltrum 28,500 equals to net tax payable is Niltrum 1,750. Dawa has meticulous documentation. He uploads for GST return taxable items only. Upload your total sales and purchase figures. Best practice, maintain a clear audit trail even for non-GST transactions. It protects you during assessments. Dawa performs a final check. Only taxable items included in return, exempt items excluded from return but documented separately. ITC claimed correctly, calculations verified, documents attached. Everything is accurate. Dawa checks the declaration box and clicks Submit Return. Return filed successfully. Confirmation. Due date 2nd March 2026. Returned amount due Niltrum 1,750. Dawa clicks Pay Now and is directed to the payment portal. Payment details pre-filled. Taxpayer Dragon Mart Wholesale. Payment advice auto-filled. TPN auto-filled. Tax type GST. Period January 2026. Amount Niltrum 1,750. Dawa selects his payment method. Bank transfer and completes the payment. Payment confirmed. Receipt sent to email. Dragon Mart's January GST obligations are now complete, filed and paid. Excellent work! Dawa has successfully filed Dragon Mart's January return with perfect separation of exempt and taxable items. No office visits, no queues. Questions? Click Contact us anytime. Dedicated GST officials are ready to help.